Good afternoon and happy lunch hour if you're popping in to join us live. My name's Hannah Perkey. I'm CEO of Evelo team with Keller Williams Realty, and I'm joined with Bob Warner. We're here for your monthly update of what's happening in the real estate industry here in Central Indiana, pulling data through October to keep you updated on this market. So, Bob, go ahead and share with us what happened in the local market in October.
Yeah, let's just get right to it. Just stepped out of another meeting. And of course, that's always the question anyone asks who is not involved in real estate. So here we are, if any of those folks that might be listening. So first up is that median sales price. So we ended October here at 309,450. That was up just a little bit under 5% over last year. So we've been pretty consistent in that 3 to 5% growth rate each month this year. So our year end will probably be right around there, which kind of match expectations for the year. Next up is that sort of median days on market. So we were at 20 there. So again, that's just the midpoint between the highest number of days and the lowest number of days. So a little bit better than the average because you're not so skewed on listings that might perform one way or the other for various reasons. So that is up 17.6% over last year. But again, cumulatively, that's only a 3-day difference. So it looks like a bigger percentage than it probably really is. Next up is that month supply of inventory. So again, historically, a balanced market has been considered about a 4 to 5 month supply of inventory. Not to sound like a broken record, but going back to the pandemic in early 2020, really through late 2022, we were well under a month supply of inventory that entire time, and that is certainly when the market was the craziest. So it seems now that people might think that the balanced market is more like a 3 to 4 month supply of inventory versus a 4 to 5. So there might be some other indicators here as we go through some of the slides today that might indicate that might be a little bit more true for us. So we'll see how that keeps going. That was up a little bit over last month. And kind of the last one in this initial look here is the percent of list price received. So on average, homes in our market for the month of October sold for 97.5% of list price, which was down just a little bit of the same period last year.
All right, great details. What else are you tracking to track the shifting market?
Yeah, so as things came out of the pandemic and those metrics started to change, first one up, which is probably the biggest one, and our last slide today will be related to this as well, is that active inventory. So obviously, as the more inventory comes on the market, that usually means that there's going to be a broader month supply of inventory. So these two kind of go hand in hand. And this is actually the first time we've peaked over this like 7,000 mark, really, since going all the way back to the summer of 2018. So it's really been 7 years since we've been this high. So that is up 21% over last year. So we'll continue to monitor that. But again, that means we're probably getting back to a more balanced market where the number of homes for sale and the number of prospective buyers in the market are kind of equally meeting demand for each other. Next up is closed sales. So where some places in the country might be experiencing a decline in sales, we actually still have been seeing an increase in sales, not significant, but we ended the month just a little bit under 3,000 units sold in our market, which was up 5% over last year. Similar to active listings, the number of new listings, pretty similar to where we were last year, just a little under 3,700 units came on the market in October. That is up about 3.7% over last year. And then that last one we like to take a look at, similar to the first few slides, we like to look at the number of homes, percentage of homes that are still selling over list price. Again, the market is always very hyper local, down to the zip code level, neighborhood level, et cetera. So there are still pockets where the majority of homes are selling for at or above list price, but as a whole, we had 13.5% of the homes sell for over list price last year. And that's really, other than a couple blips here and there, that's as low as we've been in quite a few years. Again, if you go back to 2020 to 2022, we were above 50% in terms of the number of homes that were selling above list price. So some big changes in a few of those different metrics.
Yeah, I like the first one that you showed in that shifting market about the number of homes that have closed. I was in a training yesterday and they talked about national. We've been very similar the past 3 years in regards to the amount. So I think we saw lots of people moving. People have mixed feelings right now if it's a good time to move or not, based on maybe where you're sitting on interest rates. And so I think those are great conversations to have to say, like, is it a good time for me? Because not as many people are moving as we saw in the previous couple of years, but it's steady and stable in that aspect. So that's neat to see that your Indiana ones match up with what we're seeing nationally as well. What about interest rates?
Yeah, so that's always, one of those key questions. So we've been pretty consistent the last couple of 3 months. We've come to you with this information. So we ended last week at 6.22% for the average 30-year fixed rate mortgage. That was down just about 0.12% from where we were last month. And again, we spiked, our last spike was around this time last year at just around 7%, but that 52-week average has kind of been 6.68, and the monthly average has been 6.21. So we've been floating down now in between that 6 and 6.25 for the last 30 days or so, and it certainly seems that we are in a position where we should, hopefully, knock on wood, sort of remain in that area for a while. Whether we break down into the high fives or not, that's maybe anyone's best guess. I did see something I didn't bring in today, but the difference between like a 6.25 and a 5.99, if you're waiting for that magical five number, I think it was a 400,000 or $500,000 house. I don't remember the scenario, but it was like a $48 a month difference in principal and interest. So definitely a big difference at the low sixes versus seven, but not as much of a difference if you're trying to hold out for like a 5.9 or something like that. So.
Well, and I think that makes a good point for those that have been waiting. They've been waiting for quite a while now, right? And so if you are in a position where you say, hey, I'm renting, not building equity, that waiting period could be costing you based on what Bob just said about how much would it actually save if it got to that point. So again, we can connect you with lenders who can run those numbers. And I think it's good to know the real numbers, not just make assumptions about them based on maybe what the general public's saying. Any final thoughts about the state of the market?
Yeah, so we always try to find something, and this one sort of relates to a slide we did earlier. I'm always hesitant to do like national statistics because that is such a hard thing to compare for real estate in particular, but it is definitely the case here. At the end of the day, there are just more homes and more choices in every region of the country, and this just sort of breaks out Midwest, Northeast, South, West, and overall. So we actually have a higher percentage of inventory year over year than even what the Midwest does as a whole. If you remember back to the slide where I showed we had 7,200 active units for the month ending October, that was greater than this 13%. So the bottom line there just means that there's more choices. So if maybe you were in the market during some of the really crazy period of time from 2020 to 2023 and just got frustrated or weren't successful or weren't finding what you were looking for, this might be a good time to hop back in. Interest rates are lower than what they have been for the last couple of years. You certainly have more choices. There are less homes that are selling for over list price. So there's a little bit less competition for every home. So this might be the time to sort of hop back in. Honestly, the last few months of each year and the first couple months of a new year always tend to be pretty strong for buyer possibilities, as well as things in our market, at least with four season climate, get a little cold and not as many people out kicking the tires, so to speak. And so it might be a good opportunity to catch up with someone on the team and see if we might be able to get you in the right place here at the end of the year and into the beginning of next year.
Yeah, love that. Okay, that sounds great. Well, thank you guys for joining us. We just wanted to give you a quick update, hopefully answer some questions and maybe inspire some others. And if we did, then you can reach out to us, like Bob said. We'll put our contact info below, or you can send us a DM. And we hope you have a great, warm rest of the week here as we work through the rest of this remaining snow. Thanks so much and have a good one. Bye-bye.